There is a lot of bad investing advice out there, and in this video, I want to share with you 3 rules of investing that I have been following that has brought me a lot of success. And let's go ahead and start with number 1, and that is that I do not invest in single stocks. I don't have anything against people who do, but personally, as I'm in my accumulation phase, my years where I'm building wealth, I'm not investing in single stocks. You've heard the phrase, do not put all your eggs in one basket, right? And that's what you essentially do when you invest in single stocks. I personally invest my money in low-cost, broad-based index funds. And through index funds, I'm able to have access to thousands of companies, all kinds of different securities all around the world. This keeps my portfolio diverse and more stable than owning single stocks. Also, as of right now, I do not invest in currency, specifically cryptocurrencies. I know there's a craze and there's a fad, there's a current trend of people moving into the cryptocurrency world, which is still relatively new. So in the future, I may do that. But for now, as I'm building wealth, I'm happy with my strategy of investing in index funds. And there are 8 great index funds that I talk about in a video that I'll link in the description below, so you can check that out after this video. But if you're someone who wants to invest in single stocks or cryptocurrencies or any other kind of investment outside of index funds or ETFs for that matter, I would say try to allocate maybe up to 10% of your investments to those more volatile assets. Rule number 2 is to know my risk tolerance for where I am. When you study the stock market, you quickly find out that long-term broad-based index investing has always yielded positive results. Maybe not year to year, but in the long term. One of the most important decisions that you can make when investing is how much your portfolio is allocated to stocks, bonds, real estate, and other asset classes. Stocks obviously are more volatile, meaning they're gonna go up and down like a roller coaster. And the general advice is the younger you are, the more weighted, the more you're going to lean toward having mainly stocks. As you age, as you get older, the more bonds and less volatile assets you're going to have in your investment portfolio. Currently, I have no bonds in my investment portfolio, but as I get near and near to that retirement age, I will be phasing into more stable investments like bonds and other types of fixed income. But for now, my risk tolerance is 100% equities, meaning 100% stock index funds. I personally am okay with volatility during my accumulation years. So as of right now, my investment portfolio is 80% US equities and 20% international equities. And maybe when I'm 5 years away from retirement, that's when I'll start to introduce gradually more and more fixed income until I get to maybe a 60-40 split between stocks and bonds, or 50-50. So that way I'll have a little bit more stability in my retirement years. And rule number 3 is to never panic, stay the course. Outside of death and taxes, there are very few other guarantees in life. No one can guarantee that the stock market will never go down, and no one can predict exactly how high the stock market will rise. Still, people try and get paid a lot of money to try. I'm very careful when I listen to outside financial advice, especially investing advice from the so-called experts on TV who tell me which hot stocks to buy or when to sell or what type of account or different type of investment that I should start looking into. But a big lesson I've learned from some of the greats is to continue to buy and hold as long as I'm alive. Even when the stock market is low, I will buy, and even when the stock market is high, I will buy. There is a term for that, and it's called dollar cost averaging, and that's where you continue to invest the same amount of money in the same funds or the same investment over a period of time. And that's what I'm doing with the index funds that I'm investing in my portfolio. When it comes to investing, simplicity is key. As the late great Jack Bogle, the founder of Vanguard, once said, don't look for the needle in the haystack, just buy the haystack. And I'll leave you with that. For quick investing tips and strategies, check out this playlist right here. Look forward to seeing you in the next video soon. Peace.